Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market update, and this is for 2:15 p.m. So I'm very early on Wednesday, the 8th of March, 2017. Markets have not closed. I'm normally about 2 hours later than this, but I have to be out of the office and won't be returning, and I'm leaving in about 10 minutes. All right. Stock indices basically are holding up well right here, even though they've lost what we call the embedded reading. You did go down and challenge the 18-day average in the S&P. So the break we're getting, not monstrous. The market's built in. Strong ADP number, 298,000 jobs today. Kicked up the percentages for a hike by the Fed next Wednesday, a week from today at the FOMC meeting. Jobs data expected on Friday to be 200,000, another good number. Metal markets all weak. Again, the dollar index strong at the expense of a number of currencies, and it even weighed through this big break in energies, which is probably supportive to the stock market in a way. Prices aren't deep enough to kill the energy companies, but they're mild enough to not take the inflation and the dollars out of everyone's pocket. So it's sort of an interesting play. Big washout. I had written, if you get my twice daily updates, that what we call a third flip of a window envelope comes in around 50.15, which is the last level of support on the chart, and it worked out fairly well in terms of window envelopes. And we'll talk more about that another time. When we look at the weekly chart, you can see how you've gone up to 21,162, and from there we've backed off now about, 80 points, 70 points, right in that general range. When we take a look at closing prices, you got up to 21,091, and now you've backed off from there to 20,891, but I don't know where today's close is going to come in. And it's been a very mild setback in this market. That's typically not how big bear breaks take place. As I look at the chart and I put on the swing line, this is the chart without it, you've got higher lows, higher highs, the market backing off a little bit. And if you look at the 18-day average of closes, you still haven't gotten to it, although I would not be surprised if you do. And the reason is when we get to the slow stochastics. In Bollinger Band tops, you're far away from them. This is the momentum index that I'm looking at. You're still overbought. Any reading over 70, I consider overbought. So yeah, you're backing off a little bit here, and you might ease your way back into that. It could be a combination of this moving average rising, prices falling. They're about 150 points away from each other right now, but that can narrow in. Take a look at what happened in this market. You got just about there. So you came in, held, and remember, here's what I've been telling you that I wanted to see. I wanted to see the 18-day average over the last break low, and that's what happened. The market is acting well in there. Unlike the Dow, take a look at these numbers. If you settle just like this, you're no longer in overbought territory, so a bit more strength in this market. And the market, if you take a look here in the NASDAQ, you missed by 3 points. The 18-day average of closes doesn't mean you still can't get to it. You're still overbought. So only the S&P's working its way out of being overbought. The other chart isn't, and you've never have to worry about the Russell. It's been, if anything, oversold, and it's riding the lower Bollinger Band. Not a very pretty chart that you're looking at right here. Still ugly, trendless, caught in sideways Bollinger Bands. Don't know what to do with that. Remember what I teach about the importance of the 18-day average of closes? It's the line in the sand, the reset button. Look at how the VIX has just hung at it now for months. The word is months. Really began doing this about here in January, February, and as we're finishing up the first week in March, seems to be still doing it. The bond market, lower highs, lower lows, a downtrend that's oversold into support at the lower Bollinger Band, and I'll say it again, I think that's where pros take money off the table. Same thing in the 10-year notes, oversold down to that number. Get to the dollar index, overbought, not embedding, up to the upper Bollinger Band, bye-bye. I think the smart money's taking some money off the table. Euro currency's doing nothing. It's got a pattern of a higher high, a lower low. We get the European Central Bank monetary policy announcement tomorrow morning. We also get Mr. Draghi, the European Central Bank president, holding his press conference. It'll be on most financial TV stations. You want to watch it. It'll give you an idea what they want to do, and the market is neutral as can be going into that. British pound remains fully encamped here. Bearish, embedded readings, just locking in bear trends. They can't get anything done right at this point in time. They need to set what their policies are going to be between the House of Lords, the House of Commons, so that Miss May knows what she can and can't do. Right now it appears that she's going to go try to negotiate. Everybody knows that even if she says yes, she's got to get Parliament's approval. Not a very good way to be able to negotiate. In the Japanese yen, as the ADP data came out as strong as it did, this market just let go right afterwards. You got lower highs, lower lows. The safe haven idea for the euro, not here. Traders aren't buying it. We'll see if the market comes to life next week going into the FOMC meeting, but right now it's a currency that's getting beaten down. Now take a look at the WTI crude oil. You do realize during the month of February, you hit record high open interest, and according to the data and interpretations in most publications that I read, that the bets were overwhelming to the bull side. People loading up on option strategies, futures, and so on. Everybody's underwater. This is the lowest you've been in this year. So whatever OPEC thinks they're accomplishing, they're not. Let's talk about that, number one. The U.S. coming in, is this a one-day phenomena or more? We'll find out, but you're under all these key numbers. As I said, one number was left on my chart, and that was called the third flip of the window envelope. If you've taken my charting course, you know exactly what that is, and it's a real important number. In the rebound gasoline, you pulled right back to the lower Bollinger Band. So as I have been thinking, the market is trying to establish a bottom, hasn't done it clearly, and I'm getting concerned that you're going to get a bearish crossover where the 18-day average gets under the 100 and prices below it. There might be another leg here that catches everybody by surprise. Nat gas acting great. What this chart did is it came down. You had a gap between Friday and Monday. The market on Tuesday comes down, fills the gap right in here, and then moves right back to the upside. Some colder weather in the forecast. Lots of resistance up at the 311 area. But the trend is up, and you could easily make a run if that's what it wants to do. I want to remind you, we're offering a free one-year subscription to Modern Trader. And here's the beauty of it. If you go out and buy it on your own, great, $79, great publication. You can get it from us by email by just giving us a call. Go into our website and you'll see the free offering. Now, let's talk about it. This is the current issue, the April edition. You can see you've got stocks, you have option strategies, FX, cycles, earnings that it talks about, the ETFs. Name what you do, it's going to be in here covered. And then you get the great stories like platinum gold spreads, how to trade some chart patterns if you're a chartist, but written in a way that you're going to understand. There are other publications that are more sophisticated, and unless you're a math major, you're going to get lost. You won't in this one. Daily market focus, instead of waiting each month for your reading, you get stories every day. Give us a call, go to our website, click up here if you're watching me on YouTube. Underneath us, on many websites, it'll say click here. The form will appear. Choose our offerings, and away you go. I'm Ira. Sorry for having to do this so early, but we'll be on a regular schedule tomorrow. You have a great trading day.